Buffett bet $1 million that doing nothing beats paying experts. 10 years later, he was right. By then, you will know why and how you can beat them too. But first, what are hedge funds and why do people pay them millions? Buffett writes in a shareholder letter, challenges hedge fund industry. I bet S&P 500 beats every hedge fund over 10 years. On this challenge was agreed Ted Seides, co-founder of Protégé Partners. So the conditions was to calculate the results after paying fees of profit in 10 years, and Ted Seides can choose any 5 fund of funds. And Warren Buffett from his side should bet on S&P 500 from company Vanguard. So, what is fund of funds? Fund of funds is company which hire and search for hedge funds. And they took percent for their work, like 1% yearly and 10% from your total profit. But also we have hedge funds which took around 2% from your assets and 20 from your profit. And in result, we have 2 layers of fees and 35% of profit you need to pay these companies. So why people go to this fund of funds? Because they don't know how to invest. And for example, they hear the stories about Nvidia are growing, AI, artificial intelligence are going good, we need to invest, I don't want to lose the moment, I wanted to make money, and etc. and etc. But they don't know brokers, where they can go, where they can put money, and in which shares they should invest to pay fees, and etc. 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 In this case, they believe that if they go to these companies and say that, okay, took my money and give me profit. And they give them profit, but they can make more by their own. And I don't judge them, because we all don't know where to go and where to invest money. So it's just psychology. You don't want to lose the moment when you can make yourself rich, and that's it. And this challenge has a little thing, that names of all 5 funds were never revealed. That was a part of a deal from the start. But think about it, Seides ran a fund of funds company. He probably picked his own fund, and after losing, he just don't show it. It was part of the deal that if I think they will lose, he will not show that it was one of his company. And what is S&P 500? S&P 500 is an index that tracks 500 best companies in the US, and it took very small fees, like 0.03% fee. It's easy for us newcomers, beginners, to invest, because we can easily invest market in US economics, for example, because we don't need to know more about all companies to calculate some risks, to think maybe I need to invest in this company or this. We just took big amount of them in one share, in one index. And it's very easy for us because and it's very good because we do diversification, because to believe that 500 biggest US companies will go down in one day, very hard. And if something will go wrong with one company, other companies will close this gap between profit and loss. You just bet on economics. The results of this challenge were interesting. S&P 500 make gain in 125% total profit in 10 years, when the best fund of funds make only 87% and the worst made 2.8%. So, and we see that in the first year it was very hard for S&P 500 because 2008 is the year of economic crisis. And we see that fund of funds do better than S&P 500 because fund of funds and hedge funds, it's active investors. They manipulate with shares, they buying, selling, and etc. But when you buy an S&P 500, you just bet on the whole market and do nothing. So in the first year, market give good start for fund of funds to beat the S&P. But how we can see in all other years, the S&P 500 beats every year, year by year, every fund. Only in 1 year, one fund beats S&P 500 a little bit, but in all situations, S&P 500 was a winner. What is a performer? And we see that annual gain for S&P 500 for these 10 years were 8.5%, when for best fund of fund was 6.5%, and for worst it's 0.3%. So in this case, if you invested $1 million in S&P 500 in 2008, you will get in 10 years row $2,278,000. But if you will invest in best fund, you will get $1,877,000. And in the worst, you will make only 28,000 in 10 years. So why they lost? They lost because of fees. Because when you need to pay 35% fees from your total profit every year, it's very hard to beat S&P 500. Because you need to beat market every year with a gap more than 35%. And what this story tells us? This story tells us that we can invest in market without knowing a lot. When you buy an S&P 500, you bet on US economics. You bet that in 10 or 12 years or 20 years you will live better than now. And it's easy to imagine because we can ask ourselves, do we live better now than we live 10 or 12 or 20 years ago? Sure, we live better. And it shows that economics grow, and believes that economics will grow in 10 or 20 years easier than believes that everything goes bad for US. So, and also you bet on the 500 to best 500 companies in the US. So in this case, you make diversification, but in real situation also better to make diversification by countries and etc, but it's another topic. I like this story. This story shows us that passive investments beat active investments. Maybe not in all cases, but it shows that better to just put your money and do your work or something like that and wait for some years and you make profit. But when you always be, oh, I need to buy this, I need to buy this, I need to buy Nvidia, I need to buy gold, I need to buy Alphabet or something like that, it's not works like this. You just in a jail with news and you bind it what they are talking about. So from this story we understand that better to bet on economics. Thanks for watching and see you next time. Bye.